Hello traders and good morning and welcome to this ECB preview for today's interest rate decision that is going to be announced by the European Central Bank. So traders, I just sent out a short message giving you an in-depth analysis of the euro and what's happening. So I do want to just create this short video to give you a more of a in-depth analysis, and you can listen to me go over the euro's recent rally in price. So traders, we know the euro has been very bullish because earlier in January the ECB released its minutes. So each month when the interest rate decision is made by a central bank, a month later they release a statement which gives you an in-depth analysis on why they decided to keep interest rates on hold, or whatever their decision is with their interest rate decision and what they're planning to do with the economy. They always release a text of PDF document explaining their decision, and in this decision they said that their guidance on their QE program could be changed. So guys, if you go into the members area, you know that the ECB is embarking on a quantitative easing bond purchase program since 2008 financial crash, and this is to pump money into the eurozone, and by doing that they basically the ECB directly funds all the European governments and European corporations to put money into the system to get people back into work. And then when people are back into work, this can really help boost the euro higher, because spending will increase as more people are put into work, more people have jobs, and the whole economy picks up. And now inflation is slowly starting to creep back towards their 2% target. All the data coming out of Europe has been very, very strong and positive, showing that they are at the beginning of a new growth cycle, and this is what's caused the euro to be so strong in the whole of 2017, and we can expect it to continue in 2018 as long as the data continues to show a positive uptrend. Now more importantly for the euro, the ECB is scheduled to come away from quantitative easing in September of this year. They're expected to stop QE, but the market doesn't know if they're going to have another extension and add more quantitative easing to try to continue to push inflation towards that 2% target and continue to get people back into work, or if they're going to withdraw from QE because they feel the economy is already in a growth cycle that is self-sustaining and can continue to rapidly decrease unemployment and get inflation to their target. So traders, if you have a look on trading economics, sorry, wrong one. If you have a look on trading economics and we have a look at the eurozone economy, let's have a look at the jobless rate. If you can see, for the past year it's been rapidly declining unemployment. So every single month people are going into work and the unemployment rate just keeps dropping and dropping and dropping, which is showing you that this QE program is working. So all this money they're pumping into the system means people are now spending money, and as we know, as people spend money, businesses have to hire new people to meet the new demand for their goods and services because spending's increased, and this is what rapidly soaks up unemployment and makes people get back into work. And as we know, as unemployment goes down, less people are available for work and wages go up because businesses start to compete with each other for the remaining amount of talent. Plus they start to pay higher wages because people are working more hours to meet this high demand and spending, and this is what drives the economy and drives unemployment, and this is how QE is used to try to get inflation towards their 2% target. So at the moment, the recent ECB minutes said, and they stated, this is what caused the euro to get really strong in the first half of this year. The ECB's minutes said that the European Central Bank may change its guidance in the early parts of this year. And what that means is the ECB may signal to the market they're going to completely withdraw from QE because they believe the European economy is in a growth cycle and it can sustain itself, and they don't need to continue to pump billions of euros into the economy each month. And this is what's caused the market to buy the euro, and this is what's caused dollar weakness. As we know, the euro makes up 60% of the dollar index, and this is what's really driven the euro higher because of this expectation. And we must remember, if they do withdraw away from QE, then interest rate hikes will follow sooner rather than later, because when you withdraw away from quantitative easing, you believe inflation is around your 2% target, and then interest rate hikes will be used to maintain inflation around 2%, because as people continue to rapidly soak up the unemployment level. We must remember, for an example, the UK unemployment is at 4.1%, US 4.2%, around the same area. So there's a lot of millions of people in the eurozone economy still to get into work, and this will of course mean more spending and rapidly drive up inflation even higher. And this is why the central bank will have to use interest rates to maintain inflation to stay around their 2% target. So today's ECB press conference is very important because the markets want to listen to the president, Mario Draghi, and what he says about the recent ECB minutes and what it said. And is it true that the ECB is going to withdraw from QE? Is it true they're going to change their policy guidance? Because remember, some ECB members have been saying, yes, the Eurozone economy is performing well, we're going to move away from QE, inflation is moving towards their target, and this is causing the euro to get stronger. And then some ECB members are saying they don't want the euro to get too strong, because as the euro appreciates in the exchange rate against the dollar and other currencies, this means that European goods on the international market become more expensive, because of course if you exchange dollars into euros, if the euro is getting stronger, you're getting less dollars, you're getting less euros in return for dollars. So that means that European exports become more expensive, so less money comes into Europe because sales go down, and then of course that means that less money then can be spent in the European economy, and this dampens inflation reaching their 2% target. So they don't want the currency to get too strong. So if Mario Draghi comes out today and says of course that QE may be extended, that interest rates will be kept low for a considerable amount of time, that he's worried about the exchange rate, this can be the catalyst to drive the euro lower, and we can potentially start to sell the euro because the markets will not be buying the euro into any more expectations. However, if he does say the ECB is not going to change their guidance yet, but he does continue to show attention to the strong economy and doesn't mention the euro exchange rate, this may cause the euro to go higher, and then we can potentially buy this currency pair. So that's just what we're going to see today, traders. We have this ECB meeting minutes, the ECB's press conference after the interest rate decision, and that is coming at, I think, around 12 o'clock midday today. Yes. Okay, so the interest rate decision is at 12:45 and the press conference is at 1:30. So this will really be an indication of where the euro will go. And if the euro does push higher, guys, we'll definitely be looking to buy the euro against the yen, which should push out more higher. The euro has been on a very strong uptrend against the Japanese yen in 2017 and is expected to continue in 2018 as the ECB moves away from QE and the Bank of Japan continues with their massive QE program because they're struggling to get inflation to their 2% target. So traders, we'll just wait and see what happens at 1:30, wait and see what they says, and then we can get some good trade ideas moving forward. I hope this video makes sense. Any questions, please shoot me a message. Thank you.